Welcome back, Mark.
Thank you. Good morning, everybody.
Good morning, Mark. Welcome back to Face. I see your face, and I don't know if you want to use your camera or not, but here.
Yeah, I tried to, but I don't think you're. I wanted to scare everybody, but I don't think it's. I think you got me blocked.
Oh, no kidding. Blocked on the video?
Supposed to stopped it. Yeah.
Huh. All right.
I think the picture's better anyways.
All right. All right. So yeah, I'm live, and you could tell I have my pandemic haircut. Did you want to share your screen to show anything today, Mark?
I don't think so. I think we'll be able to talk through it.
Okay. Well, then I'll pull up a few charts when we're talking about it. So
great.
Why don't we talk about? Start off with what's on your radar. I mean, there was this big deal of a change in tone from the Fed, and the dollar turned pretty viciously because the market was pretty wrong-footed. I mean, the whole world was bearish a dollar. What are you thinking in here? Why don't we start with Euro, Mark?
Yeah, sure. You know, I was listening to Blake and Salvador speak, and my sense is that here's where I would differ. It seems to me two things I'd point out. First, it seems to me that this year the dollar has changed direction, even on a short-term basis, right around the end of the month, around the jobs data. And that really the second point, and that is the dollar's rally is a month old. So for me, the correction, so remember what happened. The dollar rallies in Q1, comes down again in April and May, and now is rallied again in June. I think that this June bounce is corrective in nature. I think that the dollar still is going to be falling, and I think that this bounce in the euro, even though we probably will make a new high here, that the bounce in the euro, or this the drop in the euro, or this bounce in the dollar index is maybe we make one more extreme, one more high, and then I'd be looking to fade it. You know, about a week ago or so, the dollar, when this low that we're approaching again, it was 3 standard deviations from the 20-day moving average across a number of currencies. And as you know, those Bollinger Bands, 2 standard deviations. So 3 standard deviations, an even more extreme move. So I faded it, and but it's come back here now. And I think that there maybe is scope for one more little push higher, maybe a marginal new high, but this correction is long in the tooth. I have my MACDs and slow stochastics overbought for the dollar. I think the market has moved too dramatically in response to what it thinks is a hawkish Federal Reserve. You know what came out this week is that the Federal Reserve didn't even talk about the dot plot at its meeting.
Yeah.
And why should they? All it is the different Federal Reserve presidents, the governors, who don't get their job necessarily because they're good economists. As you know, Powell's not even an economist by training.
He's a lawyer. He handled my DUI here in California.
There you go.
Go ahead.
Yeah, so I'm just thinking that the market's reacted more towards the dot plot than they did to the FOMC statement. And there, I think, what was said earlier, that the market has been expecting the Fed to announce tapering at the Jackson Hole conference at the end of August, or the late September FOMC meeting.
You could share your camera if you want now, Mark.
Excuse me?
You could share your camera now. It's been fixed if you want to.
Okay, great. Yeah, let me see how we get. Yeah, I'll start the video for what it's worth.
Flow. There you are.
There you go. Okay.
Okay, buddy. All right. Great. So the people are misinterpreting what the Fed said at the last meeting, Mark. You know, I mean, what a jawbone. I mean, you got $100 break in gold, few dollar break in silver, with them doing nothing.
Yeah, I mean, I think that
we
should expect them to taper for sure. But still, the Federal Reserve seems to me to be behind the curve, and we're going to get next week is the trade balance as well, and maybe tomorrow we get the trade balance. And I'm thinking that when the U.S. has such large budget deficit, and remember, we had over a 4% deficit before the pandemic struck. Large budget deficit and a large trade deficit. Most of the other major powers, Eurozone, China, Japan, they have budget deficits, but they also have current account surpluses. And so I think that the twin deficit issue requires either higher U.S. interest rates, which we're not really getting, or a weaker dollar, and probably some combination of both. So I hear you that the dollar has, at the end of last year, remember what happened? The dollar sold off hard from the election through the end of the year. That those last 2 months were horrible for the dollar. It bounces back in Q1, comes off in April and May, bounces in June, and I still think that it's just a counter trend move. I'm still looking at a lower dollar. One other thing I'd say about how my views differ, I think, and just to think about what's going to happen going forward, is everybody's talking about this growth accelerating. We're going to get something like double-digit real nominal growth in Q2. Yep. But I think that this is the peak. Growth in Q2 is probably going to be the fastest pace. And a year from now, we're going to be looking at 3% GDP in the rearview mirror. And so I'm looking at the fiscal cliffs, the end of monetary easing. They might not take the foot off the accelerator. It might not tap on the brake, but they'll take the foot off the accelerator.
Let's talk about fiscal cliffs, because I believe, Mark, that we have the debt ceiling coming up again at the end of July. And that could be a real battle with all the checks that have been cut from the federal government for fiscal stimulus. I mean, this would be a great time for the Republicans to make a stand about, spending, and maybe we're not going to raise the debt ceiling. What do you think? You're smiling about it. What do you think?
Yeah. No, I think that it's just political machinations in Washington. They're gonna. The fact of the matter is, we spent the money already. We've already committed to spending the money. So now it's sort of like worrying about the bill after you've eaten your lunch. And so I think you're right, though, that there has been some impact on the market, especially because the Treasury has to reduce their cash position. And as they reduce the cash position, that basically has led to fewer T-bills and also downward pressure on those short-term interest rates. But I'm thinking that the other big thing that we haven't talked about, I haven't heard you guys talk about yet, is oil prices have doubled since the end of October. And the past 3 economic downturns,
good point,
oil prices have doubled before each one. And so you combine this fiscal cliff, the end of monetary support, the exhaustion of pent-up demand, not right away, but in a few months, by early next year, these things will be behind us. And that's why I think that we're headed for an economic slowdown starting around the middle of next year. So we got another year of the sugar buzz.
Okay, that's interesting. So, a lot of the support payments will end, although some new ones may start. Politically, you think they're going to get something done on an infrastructure spend here?
Well, I think they're going to get something done. It's a question of, I think, how big it is. And even though $1 trillion sounds big, it's over a decade or 8 to 10 years. And here's the thing. I think that we've really starved. We've really put the U.S. economy on a diet. The infrastructure is not world class. And I know that the Biden administration is talking about build it back better, and how the America is back is really predicated on having to compete with China. But I think being citizens of the largest economy in the world, one of the richest countries, we deserve, just for ourselves, even if China didn't exist, we deserve a better infrastructure than we have. And so I support these ideas. I think that they're long overdue. And that's the reason why it's got to be so big, is because we've neglected it for so long.
Right. Okay. So hopefully they get something done. I'm worried about the grid because, I live in a place where it gets to above 100 during the day. So, any kind of energy outage, and I'm freaking out if that happens. So I also want to ask you about what you think, Lagarde, we had the ECB last month, and you gleaning anything from Lagarde about what's happening in Europe that supports your positive view on the euro?
Well, yeah, it's interesting. I mean, so Lagarde and the ECB, they basically made that this July meeting they're going to have in a few weeks is a non-event. The big meeting will be in September when they get to review again their stepped up bond buying. But you know what's happened? Since they increased their bond buying in March, the euro had actually strengthened, and yields have actually risen in Europe despite the added bond buying. I don't think it's a major deal, but here's what I'm looking at. So imagine that the Federal Reserve announces in August or September that's going to taper beginning later this year, right? They've told us that they will give us a heads up before they do it. So if they announce in September, maybe it's going to be for the December. The ECB's emergency bond buying program called PEP, P-E-P-P, that's theoretically, I mean, it's scheduled to end at the end of March. And so it's possible that the ECB's emergency bond buying program stops before the Federal Reserve completes its tapering. And so I think that I still think that we're in a world in which the Federal Reserve wants to lag. It does not want to be the first, whether it's in the central bank digital currency, whether it's in monetary tightening. The Federal Reserve does not want to be on the front of the queue. And it's possible that the ECB sneaks a bit ahead of us in terms of its emergency bond buying.
Okay, so you think yields are stuck in this range on the 10-year mark, trading about 148?
Really surprised me.
I'm having a hard time forecasting it. At times I think we're going to head up and take out new highs in yields, and then I could also make a case for 130, 120. I'm wondering if you have any clarity there.
I wish I did. All the smart people I talk to keep telling me yields are going to go up, and they tell me that the yields are down because the Federal Reserve is buying. I don't know. It just seems to me, we're still in a world in which if you're to save money, to give your money to one of the most cautious central banks in the world, the Swiss National Bank or the German Bundesbank, they charge you 20 basis points or 25 basis points to take your money. And we still live in a world, I think, in which it's still more characterized by a surplus of savings searching for a home. And I think partly that's what crypto means too. I mean, I think crypto comes about at a time when we have incredible surplus of capital, very low interest rates. And I think that's the real challenge. It's not just the middle class that's having difficulty reproducing itself, but so is capital, low negative real rates. And we've got about $13 trillion of negative yielding bonds in the world still. $13 trillion.
Yeah, that's a lot. That you brought up crypto. A lot of these central banks are, I don't know, in the white paper stage or even further along of considering digital currency. Like China wants to have a digital yuan. They're talking about, perhaps a digital dollar. Do you think that there's going to be any moves in that direction over the next, say, 6 months, 12 months that any of these countries? I would think that China banning crypto might be the first to introduce a digital yuan. Have you looked into that?
Yeah, sure. This is one of the big issues. And I kind of think this is, when I think about the crypto space, I think there's two coming challenges. One is, as you mentioned, the Chinese have banned the crypto.
Yeah.
But this is not new. This is just really enforcing something that they decided a couple of years ago. But I fully agree with you that this is about command and control functions in China competing with Alipay and these other platforms. And so I do think that China is going to have a digital currency. And I think that the Olympics next year might be a big launch for them. On the other hand, the other issue, I think, is U.S. regulation is coming. And I know a lot of my friends in the crypto space won't like it, but the problem is that, one of the biggest growing areas of the U.S. Treasury has been the anti-money laundering, anti-terrorist financing. And it seems clear that the crypto space has not enforced those rules as much as, say, regular banks or regular platforms. And that's going to be a problem going forward. And so I think those are the two challenges. But I do agree that, there's something important that the crypto has contributed to our understanding of finance and to the sort of fintech evolution. And that is the security and instant settlement that's possible in crypto. The central banks want that. They want it for themselves. We, as citizens, want that. I mean, you think about how long the cost, even on MasterCard, even though it can process a lot of transactions, it still is expensive and time-consuming. And I could imagine the benefits of a digital currency. But remember that the world that we live in, Dale, is already highly, digitalized. Most of
Yeah,
the
we already
trade,
have a digital dollar. I mean, try and pull 5K out of your checking account and they'll raise their eyebrows. Well, sir, we don't have that much cash on hand. You
yeah,
have to
I think.
order it. You have to order it, Mark.
Yeah, so exactly. So I think that like even most of the trade, one of the reasons we follow SWIFT, the international like platform for transactions, is that this is a lot of the trade in goods and services is picked up over SWIFT, and at the end of the day, it's digitalized. ACH, how we get our direct deposits from our paychecks or how we make transfers. ACH, also highly digitalized process. So I think in the U.S., we're already very advanced. But of course, what we saw in El Salvador, 70% of the people are not banked or have credit cards. So it makes sense that in places that don't have strong financial systems, crypto tries to fill in that vacuum. My own guess, though, is that crypto is still way too volatile to be used effectively as a means of transactions.
Yeah, I mean, if you went into a grocery store, what you thought you were going to spend could be a lot less or a lot more in Bitcoin by the time you get to the register.
Well, what they do in El
Right?
Salvador, if I understand it right, everything is still priced in US dollars. And
Right.
you could just you could just pay that dollar price with crypto, Bitcoins, if you wanted to.
Right.
I don't know. I'm suspicious of this still. I think that just like very few people, I think, would challenge the state, the sovereign's authority to impose justice. And they have a monopoly. And I think that they really do have a monopoly on the power of coinage, probably for good reason. I know a lot of my friends talk about this decentralized finance, and it's very fascinating. But my understanding of American history is that the Federal Reserve came out of trying to solve the problems of decentralized finance. Imagine what it was like in the 19th century in the US, where each of the states would have their own state bills. They would be traded at a discount.
That's right.
50 different state or whatever number of states having their own bills and trading these. So the Federal Reserve grows out of the weaknesses of decentralized finance. And I think that a lot of my friends have now forgotten about why we have centralized finance. And even there, when I looked at the ownership of Bitcoins, it's still by IP addresses. It still seems highly concentrated to me. Something like over a third of the IP addresses that have Bitcoin have more than 1,000 Bitcoins.
Yeah.
1,000 Bitcoins. So it's such an incredible concentration. And I wonder if, given the highly concentration of power and wealth and income in the United States, how something that can emerge within that is not going to reflect those same divergences and same concentration of wealth and income.
Interesting. And speaking about vacuums, it looks like you had made a move to fill a vacuum with your world currency index. It's something that you've put together. I want you to spend a few minutes talking about it. And I have your website up here. So I remember reading about it on Twitter, seeing some of your tweets. So why don't you tell our viewers what your goal is and what you're accomplishing with this?
Yeah, sure. I'm old enough to remember when the dollar index was launched. I was working at Dean Witter that was owned by Sears at the time.
Yeah, you could buy a washing machine and
we used
trade.
to say stocks and socks.
Yeah.
And I helped market the dollar index when it was first launched. I like it. It was partly because it's a basket. It trends better. And so a lot of my trend following tools, like a simple one that I worked at the time was a 5 and 20-day moving average crossover system, was the best in the dollar index for many years. But in the last 25 years, 30 years, different things have happened, and the dollar index no longer reflects the U.S. economy or world trade. For example, China and Mexico, two of our three biggest trading partners, aren't even in the dollar index. And so I try to think about what we want. What do we want to have representative of a currency basket? And what I did was created a GDP weighted basket. And this GDP weighted basket, I worked with Bloomberg, so it's available on Bloomberg. And I am talking to some shops about trying to come up with an ETF based on it. But it's a 12 countries weighted by GDP. The dollar is alone is about 30%. The euro and the Chinese RMB each are about 20%. But out of those top 12 countries, 6 of them are emerging markets. And which is kind of interesting because India, despite this horrible pandemic, dealing with it, that India is going to move into like 5th place in the world economies, whether it was last year or this year. It's coming. And so the basket then is half major countries and half emerging market countries. And it's interesting. I find it more representative, lower volatility, but more representative. If you were coming in from Mars or the moon, perhaps, and you wanted to see what's the basket that's representative of the world economy, a GDP weighted measure where the dollar is about 40%, the Eurozone and China roughly the same size as each other, and then breaks down quickly from there, where Japan might be only about 7% or so. So it's an interesting product. I think it's an interesting way to begin thinking about the world in a different way than these trade-weighted indexes, which are like the dollar index, which is really too old and not representative anymore. So I suspect that for those of you who are thinking about ETFs and what the market needs to fill in vacuums, here's my bid for a world currency index. Anybody have ideas about an ETF or maybe a futures contract, definitely reach out to me.
Yeah, you're front running the IMF because I believe that when people talk about the Great Reset or whatever it is, that they were going to value currencies based on GDP and debt. They had some type of formula, but Mark, you beat them to the punch. You know, you brought up the moon. And I know you're a thinking person, and I know this is not, I didn't plan on asking this, but I know you're thinking about this. Why in the media now are all these stories about UFOs coming out and that they're real and that the government is releasing their own stuff that they've buried for all these years? You ever think about that? I know it's an interview about FX, but I know you're a thinking man, and it is a change from, you know, it's just a weather balloon and all of that. For what reason is the media giving legitimacy in that UFOs are real now?
It's amazing, isn't it?
I'm just wondering why. Have you thought about why they might be doing that?
Yeah, I don't know.
We get our next Fed chairman walks out of a spaceship, or what do you think, Mark?
Yeah, I don't have a good reason why, but I think it's partly representative of our spirit of the age, greater transparency, greater focus, and a greater accountability. And I think that with modern cameras, it's hard to fool so many people all the time. Yeah. So I'm not a big proponent of this, but I do think that what it really raises in my mind is just and keeps us, I think, as traders, humble about the information set we have, how incomplete it is. You know, I was this takes us from outer space to something close to home. That there was something they found in Siberia that was frozen for 20,000 years, came back to life, reproduced asexually just by itself. A tough break, huh? But it's just amazing to me that we don't leave aside the economy and the macro and the way unemployment affects interest rates and how the market's positioned. We as humans are still we're just beginning to explore the world around us, and it's shocking how incredible, wondrous it is.
Well, you know, I want people, all your fans probably know, but for people who don't know, this is how you can keep tabs on what Mark is thinking and be able to work with him. And you just go to his website, marktomarket.com, right? And
yeah, so
go ahead.
Yeah, I've spent my career helping, working with large institutions, large asset managers, large corporations. And it's been intellectually challenging. But I began thinking that I became part of the problem. And part of that problem is that, I'll give you the example, that, you know, we're all familiar with wholesale and retail. We buy something, we know we're paying retail. And yet we somehow think that money is not part of that deal. But money, there's a wholesale and retail part of the market, the money market. I'll give you an example. These large corporations and large asset managers that I've worked with, they don't pay, when you look at your screen for the euro now, it goes out four places after the decimal point. There's really a fifth place after the decimal point. That is what the large corporations, large asset managers are paying. 1/1000th of a penny spread between the bid and the offer. Now, when I say I'm part of the problem, is I realized, and this is why I joined Bannockburn, I realized that small and medium-sized businesses in America, which are really the bulk of employers, They're the backbone of the country, and yet they are often treated like tourists in the foreign exchange market, paying sometimes 3 and 4% spread.
Yeah.
And so I joined Bannockburn partly to repent for my earlier sins and helping the rich become richer, and now working with a lot of small and medium-sized businesses, trying to secure for them the institutional efficiencies, transparencies that are available.
You humanitarian, Mark, and all your sins are absolved from being part of the retail, paying a lot for prices. You know, Mark, it's always enlightening to be with you and to talk to you. And I bet you didn't expect a question about UFOs today. And really some great explanations. Do you think that the stock market, I want to wrap it with it, you know, we've been risk on for eternity. Is this going to continue, or is there anything that you can see in the background beside, well, maybe the slowdown you're thinking about sometime next year that could interrupt this prolific bull market?
Yeah, that's a question I've been wrestling with myself. I thought for my personal account, I did very well last year, but I'm struggling this year. I'm just a little bit better than flat in the stock market, even though the S&Ps are up something like, what are we up, like 14% or so for the year. So I'm struggling here. I'm not sure. I mean, on one hand, I think that share buybacks, pay out to investors and dividends, mergers and acquisitions, low interest rates, even if the Fed begins tightening, like some of the Fed officials think next year. And by the way, the market right now, looking at the December 22 Eurodollar futures contract, I see the market's priced in one hike fully and about 60% chance of a second hike next year, which seems quite aggressive, given that there's only about 7 of the Federal Reserve who see a hike next year. But in any event, I'm concerned that these kind of technical factors, more than organic earnings growth, is behind the stock market's rise, and so what I'm looking for, like a lot of people, I'm looking at that say the Russell 1000 value against the Russell 1000 growth, and it's still moving, and growth is still outperforming. And so I think that maybe we get some kind of rotation as the economic cycle changes. But with such low interest rates, it's hard to imagine a sustained decline in the stock market.
Okay, the Russell 2000 IWM. Let me just show it here, Mark, with everything that, and then we'll wrap it with everything that's been going on with successive new highs after new highs in almost every other index. If you look at the chart I have here, the Russell 2000 made its highs in March and has made a few attempts to take it out, and it looks like an accident waiting to happen. You had, you know, a month to buy a test of the breakout. Heck, they even let you buy it underneath the breakout. What a nice guy that Mr. Market is, right, Mark? And then here you could buy it here again at the breakout. So this looks like a massive distribution pattern to me, and I'm wondering, you know, why is Russell struggling with since the spring with everything else doing so well? Do you have an answer?
Yeah, it's quite fascinating, and that's why I think that after such a strong rise here in the first half, like I say, I missed the bulk of it. That would it be so bad if we go sideways and still lock in the year for a double-digit gain?
Yeah,
I don't think that's so bad if it's a consolidation, which means that it's like you're stock picking and you're disciplined. And that's one of the things that, you know, I often hear you talking about, Dale, which I have a lot of respect for. And that is that the difference between the people who can take money out of the market regularly and people who can't, it's really a question of discipline, honoring your stops, having a strategy. It's not, I mean, it might sound like a game and it might be fun sometimes, but there's really a discipline involved.
okay, so yeah, it is serious. Serious business when you're a speculator. It's not going to, you know, casino to have some fun. So I appreciate you being here again with us, Mark. Great conversation. I encourage people to follow Mark's writings. I don't have to because his reputation precedes anything I say, and I hope that a lot of things work out that you're doing for the rest of the year, Mark, and look forward to having you back again. As usual, you're my trading warrior brother, and I'm rooting for you at all times.
Thank you very much, and good luck to everybody.
Yeah. let everyone have good luck and good fortune. And besides that, let's not just count our pips. Let's count our blessings. Being able to talk to you, Mark, and bring your views to our community is one that I count. So thank you very much, buddy.
Thank you. Thanks again for all your support.
All right. So that's a wrap, everyone. We'll see everyone tomorrow, the day before the NFP. Good hunting the rest of the day. And like I was just saying, don't just count your pips, count your blessings. Adios, everyone. Have a great trading day. Thanks again, Mark Chandler.